Hello and welcome. The goal of today's video, called Tech Respite, relative Tech Respite, as you will learn further on, is to prepare you for today's and ideally as well tomorrow's session. But of course you can look for a fresh video tomorrow as well. Remember that the daily analysis on my site form the basis. Twitter and Telegram serve the purpose of timely notifications and two-way discussions. Let's bring you one more chart from yesterday's very extensive analysis. I hope you have read it already and are familiar with its key tenets that would set the tone for second half of this year, and it will explain you why I had not been calling for a slide today or tomorrow in stocks, but I had been striking a cautious bearish tone with a downside bias, but still within a relatively tight ES range. And the reason is bonds. And if you have a proper look at the corporate junk bonds performance, which happened not on tiniest of volumes, that shows that we are likely to see some kind of gyrations today, and probably the buyers would try to stage an ambush during today's session, especially today's. So there would be some risk on catching breath. Quality bonds aren't likely to decline, which would support instruments such as J and K to go up, or not to tumble at least, and overall that makes for a tight range ES session ahead. Next, what I'm going to show you is a preview of the recently launched intraday signals, the premium stuff that is delivered exclusively via Telegram, by instant notifications within a closed group. To familiarize yourself with the details, have a look at my Join tab on my site, and under number 3 you will get all the descriptions. So, what have I posted in the closed group today? And it's this intraday chart, and the key question for today is: for how long can the pre-market bottom hold? I don't see 4,415 resistance to be put in danger, approached, broken today. Not really. Where we are going to be approximately opening for 385 wouldn't be as reliable support as the buyers would like it to be. Ultimately, 360s are the downside target, but I'm giving better odds for it to be reached tomorrow rather than by the closing bell today. So looking for quite some chop, but for the sellers to gradually start reasserting themselves. So the tone is consolidation before decline, and the likely underwhelming durable goods orders tomorrow are to provide us with a catalyst and one more hit to the no recession risk on sentiment. Further supportive reason of why I'm not looking for a serious downside, serious plunge today is the relative tech resilience. Resilience relatively to the ES. And that's likely to take more than today's closing bell to decline, or to at least not stand in the way of ES decline. Ideally, remember, we want to see this sector to lead which is quite tough given that it is still an outperformer within S&P 500. And as you have seen in my yesterday's video, where I showed you the chart revealing stocks percentage trading above their 50-day moving averages, we saw Friday improvements in the tech sector, but I'm afraid that these would be good enough to underpin ES for today and would be broken sometime during tomorrow. So, this chart section preparation is one part what is going on in the intraday signals. Precise market calls in real time, all the trade parameters to the S&P 500 point are the next part. As you already know, I'm writing analysis every single trading day, and I'm very active on Twitter and Telegram, so do keep joining me, following, questioning, commenting. Remember that side terms apply. Beware of various impersonators. Get familiar with who I am and what was my story to trading and financial analysis world. And the obligatory disclaimer, and hooray, let's get this video update to you as soon as possible. Have a fine day and talk soon. Thank you for liking, commenting,